Welcome to the Travelex Weekly Outlook. The dollar kicked off the week of May 9th on a broadly firmer footing as the U.S. currency has really enjoyed a sea change in sentiment recently. Not too long ago, we had seen the U.S. currency fall sharply. In fact, it hit a three-year low against a currency basket, but the tide has somewhat changed in the dollar's favor. This has come as concerns about the Eurozone's debt crisis is once again surfacing, so that is putting broad pressure on the single currency, and which has since triggered demand for safer assets. So right now we are looking at the U.S. currency. It is perched at a three-week high against the euro and the British pound, but it has come off the two-week peaks that it touched last week against the Aussie dollar and the Canadian currency. That's because we have seen a rebound in commodity prices following a sharp sell-off the week before. But last week, though, the dollar, the recently beaten down dollar, actually turned in its best weekly performance since January. This is coming as concerns about global growth have once again surfaced. At the same time, the week got started last week after on news of the death of Osama bin Laden. That, in addition to data pointing to a possible slowdown in global growth, that really led investors into safer assets like the dollar and even the Japanese yen. That all came at the expense of recently high-flying currencies such as the euro and Australian dollar. But the euro, it did fall broadly last week. At one point, it actually managed to hit a 17-week high against the dollar. But since that time period, we did see the single currency shed about 6 cents in value. This came Thursday after the ECB downplayed market expectations of a near-term interest rate increase. So that did put some broad pressure on the single currency. Meanwhile, there's a report that Greece might be mulling an exit out of the single currency bloc. That added to concerns about the bloc's sovereign debt crisis, even injected a dose of uncertainty. So that once again piled more pressure on the common currency as well. At this point, market participants are really bracing for the possibility that Greece might need an even bigger bailout than the approximate $150 billion one that it had agreed to just a year ago. So again, that is fueling concerns about the region's sovereign debt crisis. That has many investors on the lookout for if Greece would need better bailout terms. We might see similar ones for Ireland and also Portugal. So again, that is injecting more uncertainty into the bloc's sovereign debt crisis and putting pressure on the common currency as a result. Keep in mind a little bit of a backdrop on the single currency's rise not long ago to that 17-month peak. That did make it somewhat ripe for some profit taking. In just the latest week, we saw data that pointed to long bets on further euro strength had jumped to their highest level since mid-2007. So again, it's not all that much of a huge surprise to see the single currency's correction from those levels. Going forward, though, the dollar's near-term outlook, it certainly looks rosier than it did only a week ago, but its longer-term outlook remains really clouded by the outlook for U.S. interest rates. The Fed is likely to keep U.S. borrowing costs near zero for the foreseeable future, so that'll likely do little to inspire longer-term buying of the U.S. dollar. For the week ahead, investors will hone in on the U.S. Trade deficit. That is data that is due out on Wednesday. On Thursday, we'll get some inflation data at the wholesale level, followed by a report on U.S. retail sales. And then the week will finish up on Friday. That's when we'll get a look at U.S. consumer prices as well as data on U.S. consumer sentiment. If we get any type of positive data, that could actually contrast with signs of renewed weakness in the Eurozone sovereign debt crisis, and that could support the dollar. But that's it for this week. For the latest on the dollar, feel free to check us out online.